Hello guys, welcome to my channel. If this is the first time you're stepping across the channel, please do well to subscribe. Alright, so today I'm just going to show you how I typically study my chart most time before I take a trade either in the binary option or in the MT5. So I'm just going to take you through this whole process, and it's very simple to carry on the process, so just watch and stay tuned. If there's anything you don't understand, please comment it in the comment section, or if there's any idea you want to add up to this, be sure you comment it at the comment section. Alright, so welcome here once again. So the first thing that the strategy that most times I applied, because I have to do this because most persons have sent me messages on Telegram, on Instagram, asking for some strategies, and then I try to let them know that I'll make it a bit general so that everybody will benefit. Alright, so there's what I call the M strategy. Like, I don't know whether it applies to every other person, but there's what I call the M strategy. Oftentimes the chart, it draws an M like this, like you can spot out this particular one here. Okay, like this and like this and this way. Alright, so you can see this is a clear M already drawn, and the fun thing about this whole thing is that there can be a bigger M and there can be a smaller M. It can come in a very large format, and then it can come in a very small format. Alright, so like within this same list that you are looking at here, there are still some other ones that you can see, like within the smaller chart. Okay, from here to here. Alright, and then from there here, and then another one up here. Alright, which if you connect this one, it forms another M within this larger M. And when you talk about the M strategy, what you are considering is a sell trade that you want to place. And if you want to place a sell trade, and then you're looking out for the M strategy, which often comes out within the chart as it progresses. You can see here it's also out here. This is from here to here is one stroke, then here basically forms letter M. So what you're looking at to place a trade is this particular arm of the M, the last arm of the M. So just like, okay, I believe that is, I'll use this smaller format to really clarify what I'm trying to say, like clear out the example well enough. Alright, so now look at this. When you come onto a chart and you see this first arm formed, and then already you've seen this other arm formed, and okay, this one formed this way, and then this one too formed, and then what you'll be waiting for to place trade is this last arm of the M. Alright, is the last arm of the M, which in most cases you need some indication for you to be able to place trade on this last arm of the M. Alright, like oftentimes there are so many indications that I let my students know before they place trade on this last arm of the M. Some of them seldom use indicator to set it up, but to be very honest with you, indicator will not help you that much in this. Indicator, the rate at which because indicator just take signal from the previous candles, and it doesn't take signal from the one to come in the forefront. So indicator might just show you some ways or something, but it wouldn't help you. All right, so what you need here is you need to understand candles patterns, and understanding candle pattern, anybody can just google candles candle patterns, and if you google candle patterns and you click on the picture, all right, let me duplicate the chart. So now understanding candle patterns will help you a lot in being able to discern this, to understand when this last arm will be formed. All right, it will help you a lot to understand that. And how would that help? Okay, let's say for instance, looking at this now, manually using your eye, let's say you have not studied the candle pattern well enough, and you want to just understand it just by looking at it. Now the first indication that you take into consideration before you can go ahead to place trade using that on this last arm is the first red candle that come out. If the first red candle comes out successfully, then you can go ahead to place trade. But now if you look at here, this is one arm, another arm, and then another arm, and then another arm of a larger candle of a larger M formed. Now if you look at this angle here, let's say a trade is going to be placed here. Now if you look at here, you discover that first red candle, second red candle came out. All right, does that mean that it's and then another green candle, which is the bull candle, came out? All right, does that mean that one could have placed trade after this first red candle? No, that's absolute most that's okay. The first red candle serves as what they call, what you can call first indication, which is about 20% sure of the situation, you know. Now the second way you can really understand if this is going to go, if this signal is really strong enough, is if the red candle that was formed was actually formed below the last candle, the last green candle. What that means is, look at this here, this wasn't formed below, it started above, but despite the fact that it started above, it didn't go any way up, it came all the way down. Starting above here means that yes, it's supposed to be a sell trade, sorry, a buy trade, but at the end of the day it came down, it didn't even make a move upward, depicting that okay, this market is going to shut down. And the second one serves as a second indication. From the second candle, which is for me a double indication, you can statistically place your trade. If you are placing trade on a binary, like the option, you're using the option, let's say you're using rise and fall option, you know, you should leave your trade for, like, maybe if you're using 1 minute, let me use 1 minute for instance to explain this. If you're using 1 minute, it means that within 30 seconds you're supposed to you know, if the market doesn't really go as you want within 30 seconds, you should be able to sell to market. All right, so but you can see this. All right, look at this other part here. You can see the first indication, although this was the first indication, and this is normally very good on MT5, or that is a MetaTrader, but on option 2, if you have entered trade here, you know, mostly I normally advise, especially when it's starting, to enter a trade for 5 minutes. The reason for 5 minutes, because if in 3 minutes it doesn't go as you want, maybe there's a kind of a reversal, then you can, like such as this particular blue candle you are seeing here. Now the trade can be won somewhere here or down here or down here. All right, that's for option. All right, but for let's say MT5 or something, you know, it will go all the way down, so, all right, so in most, that's how you get to understand, you get to use just mainly by knowing the particular format, the way the candle forms. Now this particular page finally loads, and this is what I was trying to talk about, understanding candle pattern. Now if you go on your chart, you will see some of these free pictures of candle patterns and how to read candle patterns. You can see when the bullish engulfing, when there's a bullish engulfing, you know that it's going to be a buy, bearish engulfing, you know that it's going to be a sell, and you know, you get to know the if you check this particular one, this is the particular chart that I expect you all to download and understand fully, to know when the a shooting star and a hammer, and then upside down hammer, the hanging man, you know, all of them, they have what they depict. So what I'm saying in essence is, assuming what resulted here, all right, what resulted here is a shooting star, all right, you know exactly what's going to come out next, even if it's you are expecting an M strategy, all right. So you know exactly what's going to come out. Like, look at this part here, look at a hanging man here, and then, all right, what do we call that, hanging man, all right, this is a hanging man. Look at here, a hanging man here, and yet there was a fall here which fell up to this extent before it began to rise again, all right. And just know that this happened within a major arm of the M, all right. So if you are following the M strategy, you just know by this particular section, you just know that yes, this M is going to be, you know, we're still going to continue, all right. And one thing that I have to let you know is sometimes people wonder when to stop and when to actually continue. You know, the first arm of the M always formed, like it always has they always try to equate the last arm. That is this first arm here that is from here, the distance from here to here, they are always try to equate the distance from here to here. But in most cases, those of y'all that know how to draw trend line, you could connect some let's say I want to connect trend line to this support the situation. Let's say I connect from here, okay, to here, all right. Okay, I need to move this way. Now I want you to understand something. Now I connected this point here, you know, when this occurred here, these two, you see that there was a 4, and it also occurred here too, and there was a 4, all right. Although this cut through a little bit, but that typically tells you that when we are expecting the last arm of the M to be formed along this line here, we should be expecting this same scenario here, which actually occurred here, all right. With this now, if it had broken through, you will know that okay, this M strategy was the arm is not yet time for the arm to be formed, and the market will still go on and on and on and on. That the buying will still continue upward. But here typically tells you that okay, you are ready to place your trade, all right. So with that, now you can scroll down and see so many ways others have been formed, all right. Look at one typical example here. Look at here, you see this here to here, then to here and to here, typically forms another arm of the M. Now look at this trade, exactly. This is another arm of an M. Like if I scroll down this way, you can see it started all the way from here, to this part here, then down here, and then down here, and then down here, and this last arm here is about to be formed. All right, so if I statistically take trade, all right, this started forming from here all the way down here. All right, if there is supposed to be any reversal, or there's going to be, or let's say this strategy now has ended, because look at this. If you check the distance between here and here, you see that it's almost okay, let's connect these 2 points here. You can see that it has cut through already, and it's almost an equidistance. Okay, and what I'm trying to say is that it should always be at an equidistance before you can put a stop to it. But in this other case now, it has cut through already, which means that the likelihood that the market is going to go down for a long run in a short while, is very promising. But in most cases, what I normally advise some of my students to do is, if you can take your study, especially those that are trading on MT5, even those that are trading on 1 minute, if you take your time and take your study within 5 minutes, 10 minutes of chart, then you go back to 1 minute to place your trade, to be very nice. All right, look at this market here. It will still go down. It will go down, because if you check this here on the 10 minutes, this is one arm of the M, this is one arm of the M, this is another arm, this is another arm here. This market will still go down all the way. All right, look at, let's go back to 1 minute so that you understand what I'm talking about when I say that market will still go down and go down and go down for a very long time. So if you are making your studies, okay, you can see what I'm talking about. All right, you can, this is a decision candle, you can see what I'm talking about. It will still go down and down and lower and lower. Now this is what I'm talking about. When you take your study from the higher time frame, when you come down to the lower time frame, you see this market you're seeing right here. If you're using MT4 or MT5s, yeah, MT5 those especially, and you're trading volatility 25, right now, and you enter a short trade from here, all right, it's going to really be a good market for you. All right, now if you see the drawings we made in the 1 minute time frame, you can see that it totally match an exact frame of an M on this time frame. All right, so this is typically how I take some of my trades sometimes, how I study some of my trade before I place them. I hope this is helpful to you. If you like this video and you want to see more of this kind of explanation or kind of thing, I want you to subscribe to my channel, comment if you understand what I just say, and you know, like and share this video to somebody that might love it. All right, treat this as a kind of like a paid course, you know, because some people do pay for this and they really benefit a lot, and they really receive a lot of massive result using this strategy. This is a strategy that I have developed, and if you want to learn more, like more strategic points about this M strategy, you can as well get my ebook, which I have explained over 25 different perfectly working strategy that I personally use there. And the ebook is just less than $25, Abby. Yeah, it's less than $25. It's just, is it 25? Yeah, I think the ebook is less than $20 rather. That's about 5,000 naira. That's in Nigerian naira. So you can acquire it and then get to know each and every one of these strategies bit by bit. So you get to know this strategy, every one of them, and they are really self-explanatory in there. I explain every bit of thing, just the same thing I'm explaining to you. I further dissect them down and down. All right, so thank you for watching my video. See you in my next video.